and get started with pitch number one. And here we go. Coming up is Saurav Bhandari with Arbo.
Hello, everyone. I hope you enjoyed the conference. I'm Saurav, a CPA and founder at Arbo. And we at Arbo help founders unlock financial clarity. I met Danny at TechCrunch, and she was this amazing founder, but she always stressed out about one thing. And I hope you guys have guessed what that one thing is. It's financial management. And it's just not her. Over 60% of founders say that accounting and finance are the worst part of their journey. They're masterminds at ideas and execution, but they suck at financial management. And why wouldn't they stress out about it? They're probably using one of these softwares to handle all of the finances, payment processing, expense management, and you can throw in a couple more for payroll and commerce for sales. And then comes a finance guy who's still using Excel, pulling data from all of these platforms, managing complex spreadsheets just to drive financial insights. And what's more, a recent AI CPA report suggests a drop of 6% in accounting graduates. And I get it. Accounting and finance aren't sexy, but the ones suffering are the startups and the finance guys still pulling data. So Arbo bridges the gap between analytics, accounting, and finance. It's going to take your financial operations to a whole new level. And how do we do that? Arbo automatically drives conversational insights into your key financial metrics, trends, and even drives analytics by the department. Let's take SaaS revenue, for example. For SaaS companies, you get your annual run rate, MRR breakdown, CLV, all the way to your churn rate. We will be releasing AI CFO soon to our current users as a free beta for a very limited time, and we'll be using it as a front door to our full financial suite. With our integrated accounting software, you get to manage your books stress-free, and our financial planning features enables you to change your operational plan to a financial plan with ease, and even track your books to the plan. Remember Danny? She's not stressed out anymore, and she's one of the 150 companies that have gained financial clarity. And this year alone, we've seen double digits growth and hired more resources to handle our backlog. We've grown so far bootstrapped by providing both software and service and through referrals. And we'll be shifting to be more SaaS focused as our advanced features are released. We're just getting started with early stage to Series A companies, and we'll be pulling in our exclusive partner accountants and CFOs, and we'll be the AI-powered ERP platform for the next generation of enterprises. It's a massive market, and it's expected to grow by 11% by 2027. Some of the names here that you see, QuickBooks and Xero, were built for 30 million small businesses, and the rest are just scratching the surface when it comes to solving the problem. Arbo eliminates all of them. We had great success with Techstars, and I'm proud to announce that we got selected for TechCrunch Disrupt as well, and I'm driving there tonight or tomorrow morning. My co-founder, Ria, she has led multiple finance transformations at Edward Jones and other CPA firms, and she and the team ensure smooth operations at Arbo. And I've been a CPA since 2016, and I've led multiple finance and analytics revolutions. We've released our waitlist for beta and are looking for referrals to founders, CEOs, CPAs, accountants, and investors. Simply scan the QR code and let's chat.
So what does it cost a company to use your software?
Sorry, could you repeat the question?
What's your pricing model? What does it cost to use your software?
Pricing model for AI CFO is free right now, and it depends on how much usage and what updates that we can make. But our regular accounting software with service combined is based off of transactions volume.
What would you do with an investment? How would you use that money?
Right now, with the investment, the first thing is going to be hire an AI engineer and just grow on more on the marketing and sales side, because we have a fully live platform that can still sell.
How do you test your CFO AI analytics and outputs? What type of human capital do you use in addition to that?
Could you repeat the question? I'm sorry.
Sure. So how do you test to ensure your CFO AI analytics and information that's coming out of your system is accurate and on point?
Right. So we provide CFO services as well. So as part of that, we have other CFOs on the team, and I'm a CPA myself, so we test everything out myself. And my co-founder, Ria, nothing gets pushed to production until she approves.
In your TAM slide, it wasn't clear to me that you were segmenting part of the market. Are you suggesting that in 10 years, the entire market will use your platform, or do you think it's going to remain targeted at SMBs?
So the goal is to be an ERP down the road, right? So it's going to be a lot of the startups that are with us right now, majority of them are going to make there. So it's going to be more like applicable as we grow as well. So the enterprise market, we're not trying to go out there and sell to enterprises right now because the implementation cost is super high. Eventually we could, but the goal is like eventually we'll want to get there.
So what would it take a startup to implement you? Like how much time, how much effort, talk to me about that.
So from a time perspective, we say 2 to 3 weeks in terms of onboarding itself. It does not take that long, but it's just to manage the expectation the right way.
Most startups fail. I don't mean to be draconian about this, but what are your thoughts on that? You spend a lot of time onboarding startups that don't make it.
So there are a lot of startups on our platform on a free plan as well. So our job as finance function is to ensure that does not happen, but it's to help to avoid that. And we try our best, but still, majority of the time it fails. Yes.
For the pricing model, given that it's freemium and upgrading for services as well as other different memberships, where are you seeing a lot of your startups, which that being the core, primarily focusing on for paid services?
So primarily for free, they're more like early stage. And for the paid ones, they are around Series A, Series B, and some are at seed stage as well. So we have not gone beyond Series B, but with AI CFO, our goal is to target over Series B. So there's a trend in the market, right? People use QuickBooks for a certain time, and before they go Series C, Series D, they transition to NetSuite. So we want to sit right in the middle. And before that transition happens, we want to capture that market.
Sounds like we got it. All right.
All right, thank you.
Thank you very much. That was Arbo. Thank you very much, brother. Good luck. Welcome, Seth Radman with Infinite Giving. Good luck.
Hi everyone, I'm Seth Radman, co-founder and CTO of Infinite Giving. Today I'm here to share how Infinite Giving is not just a business, but a mission to empower nonprofits to make a greater impact. When people hear the word nonprofit, they often think of small teams doing good, but nonprofits are a huge market. If nonprofits were a country, they would have the 5th largest economy in the world. In fact, there are 1.5 million nonprofits in the United States that hold over $2 trillion in securities and savings. But despite their massive footprint, nonprofits still struggle with two big problems: raising money and managing money. You see, nonprofits have outdated methods of accepting donations. Most organizations are only asking for cash when 4 to 5 donors hold the majority of their assets, hold the majority of their wealth in assets like stock, crypto, and donor-advised funds. In addition, nonprofits must manage the money they receive. You'd be surprised, but many organizations have millions of dollars just sitting in a checking account, earning virtually nothing. So why don't more nonprofits accept stock donations or have better cash management? It's because 90% of nonprofits don't even have a brokerage account at all. That means no stock gifts, no investing, and no endowments. All things that are critical to drive sustainability for nonprofits. When most small to medium-sized nonprofits try to open a brokerage account, they don't meet the account minimums for larger financial institutions. And even if they do, they end up paying high fees for a manual process with a traditional investment advisor who doesn't understand the unique needs of nonprofits. Even when nonprofits try to self-manage their own funds, it doesn't work out because they rely on an ever-changing volunteer board with no continuous oversight. This is where Infinite Giving comes in. Infinite Giving modernizes how nonprofits raise and manage money. We help nonprofits fundraise up to 55% more and earn returns from their cash reserves. How do we do this? We've built a proprietary all-in-one fintech platform exclusively for nonprofits. Let me show you how it works. First, nonprofits create a brokerage account online using our automated 15-minute onboarding flow. It's 100% digital with no wet ink and no paper forms. Next, you launch your donation page. In addition to cash, you can accept stock donations, crypto donations, donor-advised fund grants, and endowments, all within minutes online. And lastly, you select a portfolio to grow your cash reserves. Nonprofits typically need 6 to 12 months of cash reserve funds to operate sustainably in case something like COVID happens. Instead of having this money just sit in a checking account, we help you grow it through low-risk investment portfolios. It's what nonprofits have been desperately begging for, a single tool to raise and manage money that is easy to use and donor-friendly. We make money from our SaaS donation page and as a registered investment advisor providing cash management. These two services are actually lead gen for each other because we see about 75% of donations received get reinvested back into cash management. We launched our product less than 2 years ago and have already been growing fast. We've landed 67 clients in 18 states and currently have $17 million in assets under management. We recently hit $150,000 in annual recurring revenue, and we have had 0 churn. Nonprofits love Infinite Giving, but don't just take my word for it. Here are some of our happy customers, including charities, schools, and religious organizations. They love our platform so much that not a single customer has ever left us. Thank you. Now, this is a challenging problem to solve, but we've got a killer team to make it happen. Between myself and my co-founders Karen Houghton and Connor Ford, we've already started 6 companies, exited 3 startups, built products used by millions of people, founded and run a nonprofit, and grown Atlanta Tech Village from the ground up. We're also backed by incredible investors and advisors who provide strategic guidance along the way, including David Cummings and top financial advisors from UBS and Wells Fargo. We estimate nonprofits could earn an additional $5 billion every year simply by changing their financial practices. Let's help modernize nonprofits and continue to do more good in the world. Thank you.
I had a question about your pricing.
Yes.
So with about 67 clients, 150K ARR, that's about like 2,500 per client. Like, how does that compare with some of the competitors or other substitute products in the market?
That's a great question. The 2 main competitors we have are larger banks on the cash management side and individual point solutions for things like just donating stock or just donating crypto. Our average customer size is a little bit larger than our competitors on the donation page side, compared to traditional banks, our average customer value is a little smaller.
I have a question about TAM, and I don't remember what the number was on the slide, so forgive me.
Sure.
But it's a funny coincidence. I have board meetings the next couple of days for CARE, a global humanitarian organization with $1 billion annual budget. We have a brokerage account. I'm wondering, of your TAM, what percentage of that is taken by large nonprofits with large budgets versus smaller ones?
Yeah, that's a great question.
And also 501c3 not, how do you manage that onboarding?
How do we manage?
Onboarding. To
Okay.
what kind of nonprofits? All of them?
Right now, it's all nonprofits.
Okay.
Yes, 501c, 2, 3, 4, 5, 6. I didn't even realize, but it goes up to like 20.
Okay,
There's
and then
a lot
back
of
to
them.
TAM.
And back to TAM. So overall market value that I cited was $2 trillion. Our serviceable attainable market is around $340 billion. That's the size of nonprofits. That's the size of assets that are currently nonprofits that are less than $20 million in size. We've typically found if a nonprofit is greater than $20 million, they've got their own internal people. We're really not trying to compete with that. But the smaller ones that maybe don't meet some $5 million account minimums at other traditional financial institutions, those are the people who we're trying to help.
So how do you get the word? What's your sales model to get to these nonprofits?
Yeah, great question. We rely on word of mouth from board members like you, who are often on multiple boards and share the information with all the nonprofits. But our primary driver of growth right now is SEO and organic content. We've posted a lot of content on our website with free information about investment policies, and you'd be surprised, but a lot of nonprofits every day Google, can nonprofits invest money, or how to receive stock donations. So probably 4 out of every 5 customers we get right now are organic, either from word of mouth or from content marketing we've done online.
What is your typical CAC? And obviously you mentioned the mediums that you're acquiring customers.
Yeah, our typical CAC is around $500 per customer. And average lifetime value is around $2,500.
You mentioned that nonprofits can earn an additional $5 billion. Was that for your serviceable addressable market, or how are you defining that $5 billion?
That's for the $340 billion serviceable addressable market.
Got it. And of your users today, do you have any measurement by how much they've outperformed using your platform versus their prior techniques?
We do. I can't share the name of the customer for privacy reasons, but we do have a customer who came in, they're about to start a capital campaign. They were considering one of our competitors, and they chose to go with us. And within the first year, they've already received 2 stock donations. Each one was over $50,000. And so far, we've seen average cash gifts of around $125 and average stock gifts of $15,000 to $20,000. And so just for them, they started with a balance of $100,000 for us, projected to have a balance of $200,000, and they just hit $340,000. So we're consistently seeing numbers that are in line with the research that show that nonprofits that accept assets in addition to cash typically earn about 55% more over a 45-year period of time.
Do you work with the nonprofits as well to help them get more donations, not just as a platform, but it's beneficial for both parties, obviously, to raise that amount as much as possible?
It is, and like I said, 75% of donations received get reinvested in our cash management services, which is money that we make from assets under management. So we definitely do consult with them, mostly from a digital perspective, to make sure that they're implementing asking for donations on their website in an effective way.
There's a disturbing amount of fraud in the nonprofit world. How do you manage that? How can you be sure that they are who they say they are?
That's a great question, and probably one of the things that I personally spend the most time on as CTO. We have a very comprehensive anti-money laundering program. As you might imagine, when we told our compliance officers that we're going to have donors send anonymous crypto donations to tax-exempt entities, they freaked out just a little bit. So we have a very thorough due diligence process that we go through with all the governing documents for nonprofits, as well as a thorough review of their site, and we require video calls with everyone who's coming through our platform directly. So we review it through legal documents that are available from the IRS, and additionally with interviews with the people.
And what would you do with the investment?
Yeah, great question. As we're starting to get into large organizations, we need to go through SOC 2 compliance, so it would help cover that. And also, we're growing a little bit faster than we'd expected, and so we would love to hire someone to help with additional customer success for additional customers, as we're onboarding typically around 2 to 3 to 4 new customers a week lately.
And are your customers new to a platform such as yours, or are you taking them away from your competitors?
I'd say from the donation side, the biggest competitor, hello? Oh, all right. I say the biggest competitor on the donation side is that big, ugly PayPal donate button. That seems to be ubiquitous everywhere. We see a lot of people who come over and are not happy with those, so I think I would consider them a competitor, but typically not one who is very strong against us. So.
Excellent. Infinite Giving. Give them a round of applause. Good job, my man. All right. Judges, how y'all feeling? Stoic. I love it. Pitch number 3. We have Mitch Rutledge of Vertice AI. Give it up. Mitch Rutledge. Did I get it? All right.
Good afternoon. Raise your hands if you've used Amazon, Spotify, or Netflix in the last 48 hours. Keep it raised if it gave you a personalized recommendation you appreciated, a song, a movie, a product. Now keep it raised if your bank gave you that same level of personalized recommendation. My name's Mitch Rutledge. I'm the co-founder of Vertice AI, and we're on a mission to empower community financial institutions to provide that level of personalized product recommendations for their members. We live in the Amazon, Spotify, Netflix era, and we expect it from our banks now. 66% of consumers of us say they want their bank to be more like Amazon or provide a personal shopper experience. We've seen the neobanks, the digital-first banks, are doing this. They're using predictive analytics, and they're growing over 500% year on year. The big banks are spending billions of dollars on AI and hiring thousands of data scientists to compete and provide that Amazon fintech-like experience. We're on a mission to provide a solution for community banks and credit unions to compete in this same way. So Vertice AI is not a general data and analytics solution. It's a customer growth engine to provide personalized product and service recommendations for every member of a community financial institution to help grow wallet share and reduce churn. And we do that without those organizations having to hire a team of data scientists, which we know they can't afford, and so they need a solution to do it. And that's why we created Vertice AI. My co-founders and I met working for a company called SAS, one of the large data analytics providers that's used by most of the Fortune 500 as their analytics backbone. We actually worked in the retail and consumer goods space. We all know that retail has been doing this level of personalization for decades. And we want to take that learning from retail and put it into the community financial institution ecosystem. My co-founder went on from SAS to be the chief analytics officer for Lenovo and learned firsthand how to take the power of this kind of technology into the enterprise. Our vision is to provide a solution that delivers personalized product and service recommendations for those community financial institutions to serve their members. We do that by using first-party and third-party data that these credit unions and community banks already have to serve up those recommendations that they can take action on. Our difference, we said this is B2P enterprise software as a service, but it needs to have a B2C feel that we can give to marketers and strategists in these community financial institutions so they can truly understand their clients and members to serve them more effectively and efficiently. Our first principles were this can't be a big data project. These organizations can't support that. It needs to be something that's consumable. And so again, we built a solution that only needs less than 50 data points that most of these organizations have in their core banking platforms to truly serve up recommendations for every member and client on every product and service, to really give that personalized product and service journey for each member over the course of their life with the financial institution. The opportunity is huge. The financial services industry is expected to spend over $150 billion by 2026 on personalization solutions. Today, we're focused in credit unions and community banks. Those organizations are spending over $60 billion on technology and marketing, and 86% of those organizations say they plan to make more investments on personalization solutions in 2023. So the opportunity is significant, and these organizations are making the investments that they expect to truly provide this service. So we believe for us, the opportunity is right now to provide a solution that can help them execute on their goals. We've been around since last year. We started in the credit union ecosystem. We're working with 5 credit unions today, and the results that we're delivering are dramatic, and we're very excited about what we've been able to do with them. The value that we provide is growing higher conversion rates, better marketing ROI, total asset growth for these organizations. You can see the kind of results that we get between 4 and 10 times higher conversion rates when we can give personalized recommendations that people can execute upon. So my ask today is we're not seeking funding today. We're a bootstrapped startup that continues to grow. We're looking for connections, introductions. All of you know someone in the community financial space. Make an introduction to them. Help us help them grow and compete against the big banks and the neobanks with a personalized recommendation solution to help them serve their members and help every one of their clients and members climb their financial mountain. Thank you.
So I'll start because I spent the last 15 years of my career calling on banks. The challenge with these community banks is the sales model. How do you get to them? There's so many. Have you thought about that?
Yes, so today we are doing a direct sales model. We're focusing on probably the top third to half of those institutions based on size and their likelihood to make investments in this. We do think there's an ecosystem play with some of the big providers that we can go through, the core banking platforms, the digital banking platforms, and we've started some of those conversations. So we think it'll be a hybrid. We're also working with some of the big marketing agencies that we think also are servicing them. Obviously, our solution needs the marketing execution, so we think there's a nice play with an ecosystem through several channels to engage.
And can I just ask a follow-in real quick? So I thought that's what you were going to say. How many of these banks actually have their own core data platforms, or are you having to integrate with the processors anyways? And give me an example of some of the data you're getting, and then a use case of a personalized recommendation, please.
Absolutely. So with the data that we need from first-party data that they will have in their core banking platforms about their customers, the accounts they have, the transactions they do, we can give personalized recommendations based on that. We'd love to have more data, and we believe data is a journey, not a destination, so we want to continue to add. So third-party data absolutely comes into those examples. A great use case that we have, again, in credit union land is about converting indirects. If you don't know that, you go buy a car at a dealer, you're likely getting it financed through a credit union. They want to convert those people to be more engaged members. We did a case study with that, with the data and the applications of those auto loans. We saw an 11 times higher conversion rate to get them to take a money market product with that credit union. So those are the kind of examples that we're doing.
I have a question. Do you want to go? Go ahead. I noticed that you lumped together community banks and credit unions, which I think is interesting because community banks, their revenue model is largely driven by commercial real estate loans, not so much consumer, and credit unions are the exact opposite. How do you think about serving them differently given their wildly different revenue profiles?
That's a great question. And so we've started in credit unions. That's obviously saw in our case studies. We've started talking to community banks. We know that there will be a segmentation that we need to do of how we do that, but we also think that our models can support the predictions of how do you have a relationship with a business that has mortgages, has fleets, has employees, and being able to support all those. So we absolutely think there's opportunity to provide a more personalized experience for those business customers and commercial customers.
And does someone on your team have experience dealing with business customers?
So we've done a little bit of tests with one of our credit unions, but for sure that's an area we got to learn and do more about. But I totally agree, and in 5 minutes it's hard to get to the details of that, but you totally get it, and we know we have a lot to learn for sure.
Catherine and I both have a lot of scars on this one.
Okay, we need to talk after.
So sales cycle is one thing, but implementation is another. Like, what is a typical timeline to actually get this out to market for the credit unions and banks that you're working with?
So that's a great question. Back to first principles, this can't be a big data project. So we said very minimal data to give them value. When we get this less than 50 data fields that we need, we're delivering them actionable results in less than 4 weeks.
I'm sorry if you described this, but I don't recall. How are you generating revenue? What's the revenue model?
It's a subscription for the solution. Yep, software as a service, subscription model for the solution.
Per seat or per institution?
Per
seat or per
institution,
okay.
And our revenue model is based on assets and total accounts.
Are you looking in monthly or annual?
It's a monthly subscription.
So I've talked to heads of a couple of CISOs the last month or so, and a couple of thoughts. Like one thing on top of their mind right now is more like fraud and identity rather than marketing. Is there a way to repurpose what you're doing for some of those kinds of applications, or are you just focused on marketing?
We haven't thought about that. I mean, our belief is that this is, while obviously marketing is first and foremost, there is an opportunity to expand to really strategy, right? Do we have the right products for our customers, right? We can actually show them based on the penetration they have today, maybe you need a different set of products. And the network effects of as we get dozens of institutions on the platform, we think we're gonna have a really interesting set of recommendations for not just about who to market to, but strategically, what should we be doing within our organization? Thank you very much.
Proprietary information over there, it looks like. All right, judges. We have seen 3 pitches. We had our man at Arbo, which was the CFO platform. We had Infinite Giving, which is about sustainable nonprofits. And we just had Vertice AI about community financing services. So I'd like to ask each of you quickly, tell us something that you liked about what you saw. Tell us something that you think you might have some concerns about in any way that makes sense for you.
I mean,
Are we
I
going
think
in, we're starting it like
Who would like to pick it up? We don't have to go in order. I want to see whose
I
passion
was going to
jumps
say
out.
sales cycle. I mean, in general, like obviously with any B2B, it's a long pipeline to actually get them going. So that's always a worry. But again, that's why they're here.
Okay.
I have a soft spot for nonprofits, so I'm excited about something that makes it easier to start and grow. And I think that's great. And also the last one, I'm not saying negative things, sorry, but the last one I was really interested, I think, in how you can use data and services to help the smaller banks compete with the larger ones. I'm a big fan of that.
But I also like that you mentioned the fraud that happens a lot in nonprofits, which is something, again, you think nonprofit has got to be good folks, and this does exist. So again, this is something where I would think a proper platform could help to, identify some of that and to take some of the problem out. So I really appreciated that comment.
I think one commonality across all 3 is that they have a difficult sales process for each of these, every single one. And then to that, then I think, okay, what is the solution that's going to help make that like hit it out of the park? So but I mean, there were some great solutions there.
Yeah.
Yeah, I mean, I'll just say it's really hard to be in their shoes. And so good, kudos to all of them. They all did a great job pitching. It's hard to pitch your company in 5 minutes. Like, this is just a hard venue. But I agree, the sales cycle for all of them is I wonder how much is this a business versus a product that they have to resell through the people that are already working in these infrastructures.
So the sales piece is really going to be a challenge, yeah.
I thought they knew their addressable markets very well. They had a very good grasp on who their customer was. And I think that's really not easy at some of the stages they're at. And they all have really unique product and solutions, as Lynn was alluding to. I do think it'll be interesting to see how they can grow. Are they products, are they businesses? And I think those are some of the things, if I were to advise these businesses on, is how to really build a more robust platform of products.
They're also all experienced. You often see the 22-year-olds. I mean, they've all had real jobs, and so, I mean,
Yeah, that was
again,
me.
very, yeah.
Lynn's not saying you're old or anything.
I know, a little ageism
I'm
going
old.
on here. Great. Well, thank you, amazing judges. Thank you all very much. I think you all are going to deliberate at this point. Is that right? We'll give a round of applause to our amazing judges. Thank you, folks.